Inflation looked better than feared, so why did the market still feel nervous? Friday should have been a cleaner relief day, but investors never fully relaxed because the good news on prices ran straight into a bigger problem. Nobody knows what this weekend's US-Iran talks will bring. That tension drove the whole session. March, CPI came in with a headline increase that matched expectations, but the details mattered more. Energy prices jumped hard, especially gasoline, and that pushed the top-line number up. But core CPI, which strips out energy, came in softer than expected, so the market got a split message right away. One part said inflation pressure is still there. The other said maybe the deeper trend is not getting worse. Normally, that softer core number would have helped stocks much more, but this was not a normal day. Investors were already looking ahead to the weekend meeting with Iran, and the risk around the Middle East still felt very real. The ceasefire in the region was barely holding. The Hormuz Strait issue was not resolved. Fighting tied to Israel and Hezbollah was still part of the background, and Trump made it clear that if talks fail, military action is still possible. That kept the market from getting too comfortable. You could see that same discomfort in consumer sentiment. The Michigan survey fell sharply, and short-term inflation expectations jumped. That told investors something important. Even if core inflation looked a little better on paper, people are still feeling pressure in the real world. That is not the kind of backdrop that creates full confidence. Under the surface, there were still a few bright spots. CoreWeave surged after its deal with Anthropic, and TSMC moved higher after stronger first-quarter revenue. So parts of the AI and chip trade were still working. But that strength felt selective, not broad. It helped the market hold up, but it did not erase the bigger tension. That is why this move matters. Friday was not a clean risk-on rally. It felt more like cautious relief. Investors wanted to believe the inflation story was improving, but they were not ready to ignore geopolitics, weak sentiment, and headline risk. Now the next test comes fast. Earnings season starts Monday with Goldman Sachs, and then more major banks follow. If the market wants this relief to last, it needs results and guidance strong enough to keep attention away from oil, Iran, and rising uncertainty. Don't forget to like and subscribe for more daily market recaps. This is Wilson.